Hey guys, my name is Mike Munzing with Munzing Mortgage Group. It's another week for another video. Hey, this past week was fantastic. Once again, I want to thank so many of you for supporting me in becoming the newest city council member in Aliso, Viejo. I was sworn in by Senator Mimi Walters. It was very exciting. A number of you came out. That was great. I'm looking forward to doing big things in Aliso Viejo, especially for my friends in real estate. They've been pretty rough there on your signage for the open houses, and I really want to kind of control that and help bring that into play here so we can help you out, keep those signs up, help your open houses to be much better on the weekend. Let's jump into the rate sheet for the week. Rates have headed up just a little bit over the last week or two. Last week, the bonds were not quite cooperating, but you can print this up over on my website at www.mikemunzing.com. Take this with you to your open house. These rates, when I say they go up a little bit, they're still at fantastic record lows, and you can really break the programs down so you can see what's going on. I personally recommend still the 30-year fixed, but if you know somebody's only going to be in that house for a couple of years, then it wouldn't be bad to go for one of those 5 years or maybe a 7-year to keep that rate even lower. Okay, it's time once again to jump into Stephen Thomas's report. Every couple of weeks he brings that out. Once again, it is a subscription site, and you can get that at www.reportsonhousing.com. He did an overview in this report. It's a good one to go get. And what he does, he looks at 2012. We all know it was a bit of a rough year, but let's kind of give an overview on that. He starts off with the active inventory. The active inventory kind of, as he said, dropped unabatedly all year. We started the year in Orange County with a total of 8,114 listings available on the market. Now we've only got 3,161. That is a drop of 4,953 properties, and that has been crazy. Where we are right now is 36% below the lowest record level of 2005. So we're way down to absolute record lows, which is not good for our buyers. But that brings us on to his overview of demand. Let's see, buyers are back in last year. Basically, the buying was back in vogue, and that is one of the first times that's happened after we got rid of the first-time home buyer credit. As you recall, the tax credit that we had, and once they got rid of that, the market really took a little bit of a dip, and slowly it's built back. 2012 was a great year for buyers coming back into the market. It was 16% stronger than the previous year. But now we have distressed properties, and that dropped by, in the last couple of weeks, just 382 properties, or 16%, down to 2,031. But distressed properties for the overall year in 2012, obviously with some of the changes on the government and the restrictions and moratoriums, that really tumbled as well. What we didn't see was that wave of distressed property sales. That didn't come about. We did in 2012 see 23% lower levels of foreclosure sales versus a 19% increase in short sales. So in 2012, the short sales really took over that distressed market from the foreclosures, and that brought us a number of new transactions. The problem is, as we all know, short sales are a bit of a tough process. They are still taking a long time, and hopefully in 2013 that will be shortened up. Okay, now for the expected market time. What happened obviously in 2012 was the year started overall average in Orange County of an expected 3.65 months for a seller to have his home on the market. By the end of the year, it was all the way down to 1.35. Okay, in the report, Stephen gives us his forecast of what he foresees coming in 2013. Let me give you a couple of highlights on that. He does believe it's going to be a very exciting year. What he says is that the real estate market is going to continue to gain momentum and be the shining jewel of the overall recovery of the economy. That's his view on that. Let's hope some of that happens for you and for me. And as far as inventory, he does believe that the demand will continue to be strong and will be increasing. He does expect a fairly strong appreciation, maybe 10%. He does think it's going to be, timing-wise, kind of back to a traditional market. He does believe that the closed sales for the year will be higher than this last year, obviously with more properties on the market. He does believe that short sales will increase over last year. He does not believe that foreclosures will be back, but short sales should continue to increase. And finally, he does foresee a slight increase in the interest rates. If we see a drastic increase in interest rates, obviously all of this kind of will fall apart, but he does foresee a slight increase. We have been in such record lows over the past number of years that they can't really keep them at this level, but I've been predicting rates jumping up a little bit over the years. So we'll see what happens with that. Hey, don't forget, at the back of Stephen's report, he does have some tremendous tables and charts and graphs and other things so you can have that edge over the competition when you talk to your buyers, when you talk to your sellers. You'll really know what's happened and what is foreseen to be coming up in the near future. Well, hey, we're into the new year. It's 2013. I've seen some activity kick up a little bit. It's been exciting. So absolutely keep my number handy. It's 949-689-5626. I'm here for you. I'm here for your buyers. Don't forget my online application as a very quick way to get them approved and get you out there with them with confidence that you know you're going to be able to sell those folks a home and they can qualify for that loan as well. Well, have a fantastic weekend. I will be working. Always just a phone call away. So keep my number close and have a wonderful weekend. God bless you. God bless your families. God bless this market, of course, and God bless this beautiful country. I'm here for you. Bye-bye.
Money, 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 money.